Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about the PICC Insurance Company Group of China Limited annual report. The PICC Insurance Company Group of China Limited offers a wide range of insurance products and services to cater to various needs of its customers. In terms of insurance offerings, the company provides motor vehicle insurance, agricultural insurance, accidental injury and health insurance, liability insurance, corporate property insurance, and other types of insurances. In addition to these, the company also offers life insurance products such as general, participating, and universal life insurance. Its health and accident insurance portfolio includes medical, participating endowment, sickness, nursing, accidental injury, and disability income loss insurance products. The company's comprehensive range of insurance services ensures that customers have access to protection against various risks. Beyond insurance, the PICC Insurance Company Group of China Limited is also involved in asset management, reinsurance business, internet banking, and provision of research and development, operations and maintenance, and technology services. This diversified portfolio enables the company to provide a one-stop solution for its customers' financial needs. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. Insurance revenue has been a significant contributor, with growth rates ranging from plus 6.1% to plus 13.2%. Bancassurance has also played a crucial role, with increases of up to plus 25%. Group sales have seen a notable rise of plus 10.5%, while the agent channel has experienced a substantial growth in investment insurance products, reaching plus 16.7%. In addition, participating/universal insurance products have shown an increase of plus 1.2 billion, and direct investments in uncompensated helping funds and fund equivalents have generated RMB 55 million. Consumer assistance initiatives have also contributed to revenue growth, amounting to RMB 63.86 million. Furthermore, the company has seen a significant increase in contractual service margin recognized for services provided, totaling plus $3,079 million. On the other hand, the primary drivers of revenue decline are primarily related to interest income from financial assets not measured at fair value through profit or loss, which has decreased by minus 3.4% or $976 million. Additionally, experience adjustments for premium receipts relating to current and past services have also declined by minus $47 million. The company has also experienced a decrease in the fair value of investment properties, amounting to 880 million, as well as disposals totaling 80 million and transfers to property and equipment worth 331 million. Net income and profit margins of the company underwent significant changes over time. Initially, net income increased significantly, with a notable increase of 689 million RMB. This trend continued as net income rose by 10% from RMB 56,781 to RMB 62,451. Profit margins also improved, with various segments showing increases. Insurance contract liabilities saw a 13% rise, while remaining coverage liabilities and liability for incurred claims increased by 13.9% and 8%, respectively. However, reinsurance contract assets, liabilities, remained relatively stable with a 1% change. The net profit margin of PICC Pension was notably high at 64.5%, whereas PICC Capital's net profit margin was lower at 24.3%. The operating profit margin also saw an improvement from 8.9% in 2024 to 11% in 2025, although the net profit margin remained relatively stable, with a slight increase from 9.1% to 9.3%. The company's financial performance indicates a significant improvement in its ability to generate operating cash flow. The net cash inflow from operating activities has increased substantially, reaching RMB 43,048 million. This is a notable increase of 34.9% compared to the previous year, with net cash flows from operating activities rising to RMB 118,689 million in 2025. A closer look at the data reveals that the company's operating cash flows before working capital changes have reached RMB 127,760 million in 2025. This suggests a strong ability to generate cash from its core operations. Furthermore, the net cash generated from operating activities has also increased to RM 118,689 million in 2025. Overall, these figures indicate that the company is indeed generating positive operating cash flow, which is a crucial indicator of its financial health and stability. The significant increase in operating cash flows suggests that the company's business model is efficient and effective in generating cash from its core operations. The company's debt level has experienced significant changes over the years. According to the extracted summaries, there have been multiple instances of increases in total debt. On page 248, a 2.1% increase was recorded from RMB 317,503 million to RMB 324,921 million. However, on page 307, the increase was more substantial at 10.3%, rising from $1,025.25 billion to $1,130.96 billion. Additionally, on page 323, a debt level increase of 8.7% was noted from RMB 80,959 million to RMB 89,688 million. On the other hand, interest expenses have shown mixed results. On page 189, there was a decrease in interest paid by 14.1%, dropping from 2970 million RMB to 3415 million RMB. Conversely, on page 324, interest expenses increased by a mere 0.1% from RMB 3,130 million to RMB 3,134 million. These fluctuations indicate that the company's debt management strategies have been subject to various changes over time. The performance of various segments and regions within the company has been mixed. On a positive note, the property and casualty insurance business in China, Hong Kong, Macau, PICC Life, and PICC Health have all shown strong results. The non-life insurance segment also performed well, generating 513,591 million RMB in revenue. Additionally, the headquarters and other regions contributed 26,288 million RMB to the company's revenue. On the other hand, the life insurance segment struggled, with only 25,337 million RMB in revenue. Similarly, the health insurance segment underperformed, generating 30,433 million RMB in revenue. These results indicate that while some areas of the business are thriving, others require improvement to meet expectations. Management is emphasizing the importance of serving national strategies in driving growth. They aim to achieve co-development across various business segments and leverage technology to boost performance. A key focus area is high-quality development, with an emphasis on innovation, digital transformation, and optimization of business structure. The company is also prioritizing core businesses, adapting to economic structural changes, and innovating its cross-cyclical and counter-cyclical adjustment role in the insurance sector. Management aims to build a world-class insurance financial group by promoting domestic demand, supporting innovation-driven development, and opening up to the outside world. In terms of asset management, the company is striving to become a leading reinsurance company with technology and expertise. It has a positive outlook, focusing on serving national strategies and supporting the real economy. The asset management business aims to build a first-class comprehensive asset management company with outstanding performance. Management is also optimistic about the investment portfolio, citing favorable market conditions and a strong economic recovery. They are diversifying investments, reducing exposure to certain asset classes, and improving returns through proactive practices. The company has adequate liquidity to meet foreseeable needs. Overall, management strategy centers around driving growth through innovation, digital transformation, and optimization of business structure, while serving national strategies and supporting the real economy. There is no mention of acquisitions or divestitures in the provided financial report. The absence of such transactions suggests that the company has not engaged in any significant business expansions or disposals during the reporting period. This lack of activity may indicate a conservative approach to growth, a focus on internal development, or simply a stable market position. The company has a history of paying dividends to its shareholders. According to the provided summary, there are multiple instances where dividend payments are mentioned. On page 186 and 187, it is stated that dividends paid to shareholders in different amounts indicating that the company has indeed made these payments. Furthermore, on page 188, it is noted that dividends received by the company were RMB 11,663 million in 2025, suggesting a positive cash flow from dividend payments. However, there is no clear information on share buybacks, implying that this aspect of the company's financial activities remains unclear. Concerns have been raised regarding inventory buildup and potential supply chain disruptions in certain sectors of the industry. Specifically, there are concerns about short-term insurance and single premiums within the individual insurance channel. The data suggests a significant decline in these areas, with short-term insurance experiencing a -5.4% change and single premiums seeing a -30.2% change. These changes indicate a potential buildup of inventory or disruption to supply chains, which could have far-reaching consequences for businesses operating in these sectors. That concludes the financial summary for the People's Insurance Company Group of China Limited. Feel free to comment below, and I will be happy to answer them when possible.